the Japanese policymakers are kind of caught in a bind, right, to a certain extent, because effectively what they could do to kind of stem the weakness in the yen is to actually hike interest rates at a faster pace. Unfortunately, there's extremely high debt levels right now, and if they actually do that, that's going to put pressure on Japan from a fiscal perspective, which would then put pressure on the yen as well. So it's kind of like they're kind of like stuck between a rock and a hard place. I think effectively there is some expectations that they might start to move as early as next month's BOJ meeting. If that happens, that could alleviate a bit of pressure on the yen.
Okay, so you think we're going to see a move next month from the BOJ?
I think there's a chance they might move. So I think it really depends on how the data comes out as well. Obviously, the inflation data will be quite key in that regard. But effectively, if you look at some of the economic data coming out from Japan, it hasn't been all that strong, right? Other than the tourist numbers, which has been relatively robust, the broader Japanese economy still seems to be struggling a bit. So if you actually be hiking rates in such an environment, that could put further pressure on the domestic economy. So I think it really depends on how the data comes out from here until the next BOJ meeting.